Xpeng reported their earnings this past Friday, and it was mixed results. On the news, the stock fell a couple of dollars, but then turned the page, closing higher on the day. Now, if we zoom out to the monthly chart, we can see how price hit this uh, resistance support band at the $23 level. Now, I had anticipated price pulling back to what was previously support and then moving higher, but that wasn't the case. For many reasons, we see Tesla cutting price on their cars again. We see a decline in the overall broader market. That's all putting pressure on the EV market. Um, so before we continue with the analysis and analyze whether price is going to stall here, stop here, and then move higher, let's look at this article. It's coming from CNBC. It's titled Xpeng shares drop 7% after the Chinese EV maker posts a record quarterly loss. So Xpeng on Friday reported a wider than expected loss in the second quarter. It was also the biggest quarterly loss that Xpeng had posted since going public in August 2020. Despite the hit on profits, the company's second quarter revenue met expectations. Now, when you meet revenue, you obviously must have some top line sales, and we'll get into that later in the article. Xpeng also said its gross margins turned negative compared to 10.9%, positive 10.9% during the same period of 2022. Company is attempting to turn around the business this year after a torrid 2022 during which its price sank by more than 80%. Xpeng is operating in a weak Chinese economy with depressed consumer spending, while at the same time facing cutthroat competition in China from other upstarts like Nio, Li, BYD, and Tesla. Competition is still ramping up as a price war develops in the world's second largest economy. Tesla this week cut the price of its Model Y and Model S cars and offered discounts on existing inventory of the Model S and Model X and S in China. Xpeng said its vehicle margin was negative 8.6% in the second quarter compared with positive 9.1% in the same period of last year. The company blamed this decline on inventory write-downs and losses on inventory purchase commitments. During the same day, the Xpeng CEO said the company is undergoing cost-saving initiatives across the business that should substantially drive gross margins improvements in 2024. All right, so let's talk about their deliveries. Xpeng previously disclosed that it delivered a little over 23,000 cars in the second quarter, logging a 27% quarter-over-quarter rise and beating its own forecast. In July, the firm delivered 11,000 vehicles, up by 28% on the month. That's the sixth consecutive month of delivery growth, underscoring the early signs of recovery, at least for deliveries. Now, when you cut prices, well, that spurs demand, which is why they're exceeding their forecast for deliveries. Xpeng said it expects vehicle deliveries to be between 39,000 and 41,000 in the third quarter, representing a year-over-year increase of approximately 31.9% to 38.7%. The figure would also sit higher than the deliveries recorded in the second quarter. Rising deliveries have given investors some confidence that a turnaround is underway, with Xpeng stock up by more than 50% this year. It's worth noting they also have Volkswagen's backing as well. They invested $700 million last month, taking a 5% stake in the company. So that always helps. All right, now with regards to where price is currently at, well, first let's drill down to the weekly chart. And you can see how price came up to the top of that monthly resistance support band, and then collapse. We also had some weekly sellers at this level here. If I zoom out, you have a drop, a couple of basing candles, and then a huge drop, breaking the pivot lows to the left. This was the origin of the move, or the leg down. So this band was being supported by a weekly sellers level at about $25. Alright, so I'm going to remove that. I'm going to keep this representing the monthly pivot lows. And I have a box around here because if you look at the gap higher, that was on huge volume. And price finds itself right back at that level. Let's drill down to the daily chart. Now actually that volume came on the gap here. Alright, so this wasn't the origin of the increase in volume, it was actually this candle here. Alright, lowering the probability that this level at $14 is going to hold. However, it might be getting some support from the 50-day moving average. But again, that's a shorter term momentum trend line type signal. So the level that I'm really looking at is this sideways price action and eventual breakout. It's a little bit clearer on the weekly chart. If I move that over here, typically when you break out, you get a retest before price continues to move in that direction. Because I don't anticipate this level holding, because the leg up was not performed on high volume. I personally like the $11 level. That's where the 200-day moving average sits, and you have the 100-day moving average sitting at 12. So let's do this. If I put that in red to represent the stop, and I put a line at 12 to represent the entry. It's $5 level, $4 level, 4.5, and you know, target one would be the $22 level. So it'd be good for, you know, 1.5 to 1 reward risk ratio. But depending on your time horizon, if you believe in Xpeng, let's scroll up to the weekly chart. Second target be at 34. That's where you see resistance, support. And that would offer, what I like to do is a minimum of the 3 to 1 reward risk ratio. I prefer 5 to 1 to cover any losses. But nevertheless, the chart suggests prices are going to continue to move down, but look for that 12 to $11 range holding based on the breakout. Thanks for watching. Subscribe. Please like the video.